Welcome to another edition of Insurance Question Podcast, episode number 91. It is Wednesday, June 12th, and I'm so glad Sassy Sarah seems to be in a good mood today, so that might be a good thing for everybody, I'm guessing.
No,
Look at
no.
Don, we matched today. We're all blue.
I would just say we're all blue
Oh, look
today,
at that.
The
right?
all blue episode of Insurance Questions Podcast. Just remember, all the comments and statements by Eddie Buffalo, Sassy Sarah, and Donnie Lowe are purely for entertainment purposes. And what should they do, Sarah?
Like, subscribe, share, follow. I'll do all the things for all of the things.
Fan mail, isn't that what it's called?
So we're kind of piggybacking on top of the show we had yesterday. Thank you for everybody joining us again. And the topic today is one size doesn't fit all. And we're not talking shirts, we're not talking pants, we're talking insurance and what it can do for you. Some people think, oh, I don't need any insurance. Or some people say, I want insurance so I can leave something for my kids. And other ones can also say, I want insurance because I want to make money with my money. So I briefly talked about that, Don. What do you do when somebody tells you, I don't need insurance?
Well, the first question I ask is, why do you say that? Because you want to understand where they're coming from. They may have had bad experiences in the past. They may just not be aware of what's available and the intent and purpose of the insurance.
And it seems like a lot of people, they don't think they can afford it,
Yeah.
because they don't know. Or like, I'll be at a restaurant and they'll find out what I do, and Sarah will say, how much is my insurance going to be? It just doesn't work that way. And why is that, Don?
Well, there are so many variables that go into a policy, and especially when you're talking about what the premiums would be. It depends on the type of insurance, the length of insurance, the age of the proposed insured, the health condition of the proposed insured. There's just so many variables. And that's why when we sit down, we tend to ask a lot of questions and let our clients just kind of talk us through what they need and what they want. And really, even if they don't know what they need and want, we'll get that information from them, and then we can help advise them.
How about when they have children, Don? What's your consideration when you're talking to a family with children, let's say ages 2 to 17?
Well, you always want to make sure that, should the mother or father pass away when their children are in that age range, especially, on top of the grief that comes with that, do you want them to maintain their current household and current schooling and current way of living, even though the mother or father might not be there? And you might need, some funds for daycare that you didn't need before, as an example. So, again, a lot of different considerations, and based on the individual.
Well, let me ask you this, Don. If I have a child that has special needs, am I out of luck?
Absolutely not. Absolutely
What do
not.
you
As a
mean?
matter
How
of,
come?
well, because there are programs for children with special needs to have coverage, and that's a very important case too, Ed. You want to have somebody sit down with the parents of a child with special needs, because there are so many different ramifications. And Sarah, you would know this too. You don't want to have any assets in a child's name.
Why is that, Don? Or Sarah, why don't you take that? Because I think you're going to be able to talk about it better than we could ever talk about it.
Yeah.
It comes more to the issue of legally, kids can't own a lot of different things. I know that if you try to put something in a child's name, let's say, worst case scenario, you get in a car wreck and they leave money to the child because the child was in the car, it's going to go into a trust. Like, even in a lawsuit, it does not go to the child, period, end of story. It doesn't go to the parents to use for the child. It goes straight to the child.
Now,
but
and
it's always set up in a trust.
is a family member able to take care of that trust, or does it have to be an attorney?
No one actually. For example, and the reason I say that is because my son has one. I had a slip and fall
I'm really
accident.
interested to hear this because I don't know what you're talking about.
Yeah, so I had a slip and fall accident and he was in my arms, his head hit the ground. So he
Oh,
got
geez.
some money and they put it in the county that we lived in. And it's a trust run by them. I can never access it. When he is 18, he can go cash it out. He can go move it wherever he wants. That's
But
about it.
what if the kid needs a computer or he wants to go to private school or
Doesn't
something
matter.
like that? Really? Because the
Because it's
reason
always
I'm
for
thinking
future
that.
medical costs is how that's set up.
Mhm.
But usually it's the kids can't have assets because, and I mean, you hear about the kids in the movie star industry or movie industry, acting, dancing, the parents have ownership of their money and then the parents use all the money.
Yeah.
So,
That's crazy.
but since they're not legally 18, they're not able to enter into a legal contract, which is basically any asset that's underneath their name.
So another reason for special needs to not have any assets under their name, and even if they're over the age of 18, is because if they are going to get, whether it's local, county or state or federal assistance with money, Social Security disability insurance as an example, they're going to take into account, well, what assets does the child have or the disabled person individual have? And that's going to go against them because then you'll have to utilize all of that before you're eligible for any other dollars, depending. So in that case, I would recommend, you speak with an attorney, an estate attorney, and someone that has really a lot of experience with special needs estates. That's very, very critical. And we work with attorneys that do that. We kind of work hand in hand so we can offer the best recommendations for the families of special needs.
It always reminds me, Don, of why we tell people not to, when you're setting up your beneficiary, not to set it up in a child's name that's under 18. And why is that, Don?
Well, because you don't want funds going to a child, and when they're under 18, it's going to be really controlled by probate, by the court, and the family has no say in what the probate does. I mean, they have some input, but the ultimate final decision is, if it's in probate,
It's
you can't
so
control it.
crazy. It's so crazy because if they leave it, if that person that passes leaves it to more than one person that's a minor, every single child has to have a different attorney.
Yeah, it is
And
crazy.
all it does is eat up time, eat up money in
Yeah.
legal expenses.
It does.
So, I mean, you'd be better off setting up a trust, or somebody that you trust, make them the beneficiary of whatever policy that you have, whether it's a term insurance or it's in a whole life.
Yeah.
Now when you're selling, Don, and I just brought up term and whole life, do you ever have something in the back of your mind, age-wise, what would be better off? Because I mean, I always thought the younger you are, I want to have the biggest bang for the buck. So I would actually get them a bunch of term insurance that's convertible.
Mhm.
And then if they want to do whole life, great. If they don't, we're going to be converting it after the term runs out. Explain to people what I just explained.
Yeah, so with term insurance, and it depends on the carrier, you have an option to convert some of that term insurance over time into a different type of permanent insurance. And the permanent insurance can, depending on which one it is, really build up some cash value to that policy, where term or temporary insurance does not allow you to have a cash balance. It's just not the way it's set up. And so regarding the age of, if you've got somebody just out of college and just hitting the workforce and they've got, some student loan debt or whatever the case might be, a lot of times term insurance or temporary insurance is the way to start. But always plant that seed, well, this is how we're going to start. But as you advance in your career, we're going to take some of that term and convert it to some form of permanent insurance. And that's that's
And
a standard answer
yeah,
for
I mean,
a lot of people.
we've talked about this before. Like a lot of people, like when I got into the business, I asked my ex, what kind of insurance she goes, insurance. A lot of people don't know the nuances between the two. And guess what? You don't have to.
That's
That's
right.
what you got guys like us to do,
Yeah.
The easiest way, how it was explained to me when I first came into the business, Mr. Tom being that, God bless you, Tom, you're not with us any longer. He explained to me, whole life, you keep living, you keep making more money. It's live to win.
Yeah.
Term, the only way you're ever going to get any money out of that policy is if you pass away and your loved ones get so it's die to win, which is a horrible statement, but it kind of really simplified things for me so that I would know the difference between the two when I was starting off. And for the normal Joe and Jane on the street, I've said that a million times, to explain it to them. And why is there such a big difference between number one, term and whole, and number two, between a man and a woman?
So just let me expand upon the one point you made. Another analogy that you can give to people that a lot of people understand is, well, it's like if you're renting a home or if you own or purchase the home.
I never heard that one. That's good.
So renting a home is more of the term insurance because you put money in to your rent, but at the end of the day, you don't build up any equity at all. You don't, once you're done with your rent, lease 2-3 years, whatever, you have to start over again.
Sarah, did that make sense how me and Donnie are explaining it?
It does. And something I was going to mention, because I've heard a lot of people talk about when it comes to renting, because that's the thing now, because houses are so expensive. People are like, well, I just won't buy, I'll rent. The problem comes into if you spend your entire life renting, at the time you retire, your rent's always going to increase. And it's going to be dependent on how many corporations are buying all of the homes now and turning them into rental properties, or everybody wants to be a landlord and turning them into rental properties. That your rent can go up 3, 4, 5 different times. And by the time you retire, 60% of your Social Security is just going to rent. So
That's so true.
Randomly off topic. I'm sorry.
No. I mean, that's pretty much the same because with, say, temporary term insurance, say you get a 10-year term policy. Well, after 10 years, you can renew that policy, but the
More
rate's going to
money.
be much higher because you're 10 years older. So it's the same analogy with that. As rent goes up, so does term insurance.
Let me ask you this, Don. So me and Sarah are twins. We have the same birthday. She was born 20 minutes after me. And we both want the same type of insurance. We both want $100,000 of term insurance. It's on the same day. We're buying it from the same person. How come Sarah's is less than mine?
Because you're a dude and dudes do stupid stuff.
There you go.
Don?
Because
that's the best Sassy Sarah answer I can give you.
That's a great answer. That's a great answer because the actuaries that calculate what the premium should be, they know that on average, women live longer than men. So if you were same age, same health, say you're both in incredible, health, good health, Sarah's policy would be less than yours, Ed, because of that reason.
Well,
on the flip side,
Sassy Sarah this question. Okay,
Sure.
Same thing. Twins, 20 minutes after I was born, and we both want long-term care insurance. Who pays more then?
Well,
the woman, because they typically live longer.
That's right.
And work longer. Yes.
Yeah.
It's amazing. I didn't even know what an actuary was before I got into insurance. Even today, I don't even think I could spell it if I had to.
Well, so here's my thing, and I've said this before, and it's a childhood memory I know of that I just find hilarious. And I love bringing it up anytime I can. So in our household, we had me, my 2 brothers, and the house next door, it was one boy and two girls. So we hung out a lot because the older sister was similar age as my older brother. And then the other brother was the same age as my other brother, my 18-month-old older brother, not the super older one. And then
Right.
the other girl were about the same age. So we hung out a lot. And one of the things was they got bees. This is back when we had the big bumblebees. And they caught them in a jar and they shake the jar up and they would let the bees out.
What's wrong with them?
Hold on. And they would do it in this field that was just across the street, like where our houses were. There was a street and then it was a field. It used to be a park. So they would be there with the bees, and me and the younger sister of the neighbor's house were sitting in our lawn, staring at them, laughing, and watching them run away after they let the bees out. That is why boys' insurance is always more. Car insurance,
Because
life
of bees.
insurance,
Because
health
of bees. Sarah says because of bees.
Not the
bees.
birds and the bees.
Accent,
It's
man,
because they are stupid enough to go.
Let me tell you what. Sarah says because of bees. That's why insurance
Whatever.
more for
It
fellas.
It is because the boys go, hey, this would be fun. And instead of going, maybe not, they'll go do that. And the women are sitting there watching like, yeah, go
Or
ahead.
Donnie,
That's my entertainment.
Donnie,
Where's
hold
the
my beer.
popcorn?
Hold my beer. Watch this.
Yeah,
Yeah,
watch that. Exactly. On that note.
Yes.
On that note,
How you doing on time, Donnie? I know you're gonna have to be leaving soon.
I
Then
gotta fly.
me and
I gotta
Sarah
fly.
can talk about you.
Okay. I'll let you, I'll depart then.
So,
okay.
ladies and gentlemen, the one, the only, Donnie Lowe.
Ciao, ciao, everyone. Thank you.
Yeah.
All right.
All right, now that we got rid of Donnie, what do you got to ask me about insurance, Sarah? Because you still got to buy insurance for Aiden.
I do.
Quit being cheap. Why are you being so cheap? You know a guy.
I do know a guy.
You know a
and
couple
eventually
guys.
I'll get there. No, it's trying to think of questions. There's not many questions. Like you guys explain it so well. And like I always say, every time you ask me about
Wait a second. Whoa. Was that a compliment? Oh, was that a compliment? Ladies and gentlemen, it is not my birthday today. I had to check because she actually complimented me, and that was it more for Donnie Lowe?
Whatever. I compliment you sometimes. It just depends on you. Anyways, as I was stating,
just
you
moved
guys
my
do
screen
such a
around
great
by
job
accident.
explaining it, but because I don't know what I don't know of insurance. Now I can look stuff up, but then you yelled at me because, well, you didn't yell at me. You yelled more at Donnie because I brought up something that I've never heard of before.
Yeah.
But you guys are not licensed to sell, even though he was explaining the
Oh,
information.
last week. Yeah, I know what you're talking about.
Yeah, where he was explaining the information, which was great, but he didn't add the clause of we don't sell it.
Yes. So, and Eddie Buffalo will never walk away from the screen again. I learned that. Really quick. So
let me look up some questions. Hold on. Because
Oh,
Google is right here.
do 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 do.
What do you guys look at when it comes to business insurance versus auto insurance for personal?
I don't do auto insurance.
I know you don't do auto insurance, but I'm just saying, or any other type of insurance, life insurance, business versus personal. Is there a difference of information that needs to be provided?
It does. And like we said, one size does not fit all. Because most businesses, we can set up insurance for their employees as long as they at least have 3 employees.
Okay.
And that's most of the carriers. It varies a little bit. But how it usually works is it's usually a $50,000 term insurance policy. Like say if you decide to do it for McCutcheon Advisory, okay, you would have all your employees, including you, do 50,000 of term insurance. It'd be all guaranteed issue or simplified, depending on how many people you have. And then the only big difference is that it's all or nothing. Everyone has to be on the program. Say if they don't want to, We have cards that they have to sign to cover your butt and mine that it was offered to them. Okay.
Okay, well, and so here's the question.
Mhm.
Let's say we're going to use my business.
Yes.
We'll use it as a test case. I have part-time and full-time employees. Does that
It's-
matter?
It's up to you.
Okay.
You can decide how you want your plan put together if it's offered to part-time people. Because
Okay.
what's really nice, Sarah, is that when your folks get the insurance provided by you, number one, I mean, you're looking for people right now. It's very competitive out there, no matter what job it is.
Mhm.
And if people are looking at McCutcheon Advisory and another firm like yours, almost exact, and you're offering your employees $50,000 of term insurance for free, I'm not saying it's gonna sway them to come work for you, but it's like the old-fashioned golden handcuffs. We're giving you something for free. You know what I mean?
Yeah, but so here's a question for the
Mhm.
listeners who don't know. What exactly is term insurance? What would be included that would make it a plus? I don't know why it looks like you're drinking whiskey. What
It's
is
not,
that?
it's cranberry juice, but it does say,
Oh, okay.
it does
It
say
looks
full of
brown.
shot glass, which I
That
think is
doesn't
pretty
help.
funny.
Okay. Because
Pretty
it
funny.
looks brown. It looks like you're drinking whiskey
No,
or
cranberry
scotch
juice.
or something.
No
I'm like,
UTIs for this guy.
it, I was like, it's kind of early, Ed.
So term insurance, I think Donnie was saying it's thought of as like a starter thing because for term, and the reason we offer it to businesses like that is because it'll be more affordable for the business. You'll be able to get your whole workforce for a very reasonable price. But here's the cool thing. Once you do decide to do business with us, depending on what insurance carrier we use for you, you can set up keep person in insurance for you and whoever you deemed to be a key person in your organization, or if you had partners, which I know you don't, so you could set that up because here's the thing. A lot of these companies, either the owners are maybe a little bit overweight, maybe they have a little bit of health problems, maybe they're a little bit older,
Mhm.
and it's going to be tough for them to get insurance without going through a program like this. It makes things a lot easier for everybody. And what's nice about it is that your employees, that you can, depending on what you want to do, you can offer whole life insurance and a bunch of different products to them for their spouse, their children, and their
Mhm.
grandchildren. But I always caution people on that because when I sit down with you and a lot of these people, maybe they couldn't get insurance through other people for whatever reason, health, or the other things that we were talking about. And they're like, oh my gosh, I can get insurance. Yeah, I want this. And it's all payroll deducted because you opened up a payroll slot. So we'd be able to offer this. And then they're all happy. They got all the insurance in the world. And then they get their first paycheck, Sarah. And guess
Oh, yeah.
what's missing? A lot of money.
Yes.
So I always caution people on that because, obviously we're here to provide a product, but if you can't afford it, you can't get it. You know what I mean? It'd be
Right.
crazy because you're just going to end up canceling it anyways. And that's what I don't want to see happen to folks.
That
So
still
that
looks like whiskey.
it's not, it's empty now. So it's in my belly. So thank you for asking a very good question. That was a great question.
No problem.
We are going to wrap it up like we always do. If you like working with people just like you, we're the people to see. You can reach us at www.ebiagency.com, 716-306-2020. And if it isn't insurance, maybe you want tax help, you can go to our partner page. You can click on it, and there's Sassy Sarah, McCutcheon Advisory. It's the one right up on top. Let me tell you what.
Mhm.
So thank you for joining us again today, and tune in tomorrow for annuities. And Don's on here. I can't make my joke.
Nope, you can't. You
That's
can't.
rotten. So, until we see everybody again, talk to you tomorrow and stay safe. Thank you.